Welcome and thanks for joining us at EMII.com. I'm Remy Huku with your hedge fund headlines. Today is Wednesday, July 9th, 2008. Despite woes in the buyout market, private equity fundraising continues to hold its ground as firms raised $132.7 billion across 185 funds in the first 6 months of 2008. That is just 3% shy of the $137.2 billion raised by 199 funds during the first half of 2007. This according to industry newsletter Dow Jones Private Equity Analyst. The full-year fundraising record is $313 billion, which was set in 2007. Leveraged buyout fundraising declined 20% compared to the same period last year, as firms raised only $85.5 billion across 75 funds in the first half of 2008. That's down from $107.6 billion raised in 91 funds. And staying with hedge fund news, hedge fund managers worldwide faced last year's difficult market conditions by lowering their leverage and converting a significant share of their assets into cash. This according to reports by Fin Alternatives. According to a new study by Greenwich Associates and Global Custodian, the proportion of hedge fund managers earning double-digit investment returns dropped dramatically from 2006 to 2007. The biggest fall-off occurred among funds focused on fixed income. With industry-wide performance on the decline, the hedge funds participating in this year's study reported holding fully 15% of their assets in cash at the beginning of 2008. And in more hedge fund news, a London startup, AlphaTran Capital, will make its first push for assets after the summer. This according to Total Alternatives. The firm launched a global longshore equity fund on May 1st with $50 million from Thames River Capital. The strategy has the potential to grow to $3 billion, and the firm will target institutional funds of funds, banks, and large family offices. The firm was co-founded earlier this year by Damien Tran, ex-partner of the Children's Investment Fund, along with Christophe Bouvillain, formerly of Phylon Investment Advisors, and Christophe Puyot, who is ex-Societe Generale Asset Management. And in other hedge fund news, bigger may be better for hedge funds when the $2 trillion industry's smaller players face tough choices of either merging or being forced out of business. This according to Reuters. In the first 6 months of 2008, more than a dozen smaller funds have already agreed to let larger players own a piece of them, and investors and managers expect that pace to quicken. While many hedge funds once operated with only a few people out of a basement or a garage, bigger investors are demanding more for their money. Sadas and Goldberg law partner Ron Geffner says, quote, "What we are finding is that managers of varying sizes are either merging with or selling a stake in their businesses to larger institutions. And in many cases, the primary reason is to gain access to better infrastructure and distribution." That rounds out today's hedge fund headlines. Thanks for joining us on EMII.com. For more details on these stories and much more, click onto your hedge fund channel online and read the full stories as well as the latest developments.